you're getting value from this, please like the video and subscribe to our channel as well. That way you'll be notified every week when we actually go live here on YouTube, which we are now going live every Tuesday here at 1 o'clock Eastern on YouTube. So business financing. Well, getting working capital to grow your business obviously can be done online. Nowadays, most people are using these type of alternative lenders to actually get approved, but there's a lot of different options that work for you. And the statistics on this show that 2 years ago, I saw this per the Department of Revenue, that over 98% of financing now comes from alternative lenders. What that means is it means lenders outside of the big banks, the Wells Fargo, the Bank of America, the Chase. So that's where most money is now coming from. It's just a matter of knowing which options are out there and which options may work for you because there's so many of them out there. So there's a lot of different companies in the space, and one decision you're going to need to make is how much you're going to think you'll need. And that's really probably the place to start. As we dive into some of these lenders, you'll see some go up to 50,000, some go to 500,000, some go to $1 million. So one of the first steps you really should take is to figure out exactly how much money you're going to need. And the next is to figure out what kind of financing you're actually going to want. So there's invoice factoring. If you have account receivables or customers that owe you money, there's lines of credit, right, where you can use them, reuse them, pay them down, and have access to them again. There's term loans, which are longer term loans that typically have lower interest rates. There's merchant cash advance. This is really fast, easy money to obtain. And just so you know, these are just four I just quickly mentioned here, right? There's equipment financing, there's commercial real estate financing and book of business for insurance agents, and there's purchase order financing and stocks and bonds and 401k financing. There's so many different kinds of financing that hopefully today we'll be able to map out some so you'll get a better feel for what kind of financing may work for you. We also have a lot of other videos on our YouTube channel that can help you narrow down the type of financing that you may want. Now, often your chances of getting financing depend on many different factors. Your basically personal credit score, your ability to give a personal guarantee or desire to. And I have a misprint there, obviously, if you're watching this live. Your annual sales in your business or your monthly revenue. Your time in business are some factors. Some lenders will want collateral. What I like to say is this, to break it down to its simplest form. Lenders usually want one of three things. I personally call this the 3 C's of lending. It's collateral, cash flow, or credit. Now, you can get approved for financing if you have one of those three. If you have none of those three, business credit's always the best bet. And the more of those three you have, the more kind of loans you'll get. So, for example, if you have good credit, you can get unsecured financing. If you only have revenue, you can get revenue type financing. If you have good credit and revenue, then you get term loans. If you have good credit, revenue, and collateral, all three, then you get SBA. So, factors they look at: do you have collateral? What is your cash flow? What is your credit? What is your time in business, for example? These are factors that these lenders will look at, not all of them, but some of those factors based on the type of financing that they actually offer. So NerdWallet, Nav, Credit Karma, they all offer comparisons. So they're pretty good sites where you can go to see a comparison between some different loan products, and you'll be able to get a lot of that during our presentation today. So these companies are paid for by their partners. So what happens is they're basically getting affiliate commissions if they refer you over to OnDeck, for example. And I don't know specifically if they get paid by OnDeck, but I'm just giving an example that in a lot of cases, they have affiliate relationships where they're getting paid by the affiliate. But again, that's not usually a driving factor not to use them. They usually have really good comparisons where you can compare one product or one lender to another. So use those kind of resources that are available. And again, keep in mind that they might receive affiliate commissions, so they might have a slightly biased opinion, but I don't find that to be the case. We work with a lot of lenders. We get paid when we place deals. We try, and Nav and Credit Karma and NerdWallet, everything I know about these guys is the same way. They're trying to do best for you and give you an honest comparison. And if you, whatever you choose, sometimes they get an affiliate commission, sometimes they don't, but you still want to look more into the partners and the lenders they're recommending. You want to do your own due diligence research. So let's dive into Balboa. Now, just before I dive into any of them, I want to let you know that every online lender we review here, we reached out to directly. So a lot of them we work with, and we reached out to them for the purpose of this video. Said, look, we're going to do individual videos on you and one big video that goes through you in comparison. Any information you want to give, please do. So some of these sources provided us a bunch of details that I'm going to be able to share to you. Some others didn't, where we're getting the information from things we already know or from in research that we were able to do online. So Balboa, they offer loans up to $250,000. You can basically get a 3 to a 24-month term. So this is shorter term financing. I consider this to be a form of revenue lending. I consider a lot of revenue lending to be 24, 36 months. Some term loans are available, but revenue lending typically has a little bit higher interest rate, a little bit longer shorter term, but it's easier financing to get. You don't need collateral. You can get the cash in usually days. These kind of lenders, usually you could secure money in about 24 to 72 hours. There is a time in business requirement of 1 year. Very similar. We'll talk about many kind of lenders that offer this kind of funding product and have similar requirements. So theirs is 1 year. And you've got to have 300,000 or more in annual revenue. If you don't worry, that's pretty high. Okay, usually most of them want you to have about 100,000 a year in revenue with this kind of product. So what Balboa is telling you is that they deal with a little bit longer terms, maybe even you maybe even be able to get 2 years, maybe even longer, and they're dealing with higher loan amounts. So it's just a more qualified borrower than others that offer a similar product. They may request your personal credit score, but loans aren't based on credit. Loans are based on revenue or cash flow management. So any lenders we talk about here that are basing it on about a year in business and they want to see your revenue, what they're looking for primarily is how you manage your bank account. Meaning, do you have more money going in than going out? That's positive cash flow. Do you overdraw the account with have non-sufficient funds? The more of those you have, the harder it is to get approved for these kind of loans. Do you have a positive ending bank balance, or is it negative? So what they're looking at, if you think of it like this, they're primarily looking to see do you have the money in your bank account to pay them? Because these type of services pull the money directly out of your bank account daily, weekly, or monthly for their payment. So what they primarily care about is when we go to get our money, will there be money there to get? So if you have money, positive ending bank balance, a bunch of consistent deposits, you don't have non-sufficient funds, that is evidence to them that you have the room to be able to have their payments deducted. But if you don't have those things, if you're negative at the end of the month, you have 20 non-sufficient funds, those are barriers that prevent you from getting approved. And later we'll talk about how artificial intelligence is simplifying this process. So they do provide cash advances. Now, they consider some of what they provide to be cash advances and some to be term loans. Okay, a little bit different from each other. Term loans are considered to be loans, and cash advances, revenue lending, these aren't really considered to be loans. What you're ultimately doing is you're selling your future revenue to them for a discounted rate. To you, it doesn't mean much of a difference. Just know that typically cash advances are a little bit more expensive than what you're going to find with term loans. Cash advances are up to about $250,000, just so you know. The industry norm from what we see is about $500,000. So on these, if you want something higher than $250,000, we'll talk about plenty of sources that do offer them. 3 to 18 months, these are shorter terms. A lot of other loans in this space that merchant cash advance can go 24 to 36 months, so things to keep in mind. No collateral is needed. There is a time in business requirement of 1 year, and they want you to have $10,000 a month in revenue to qualify. So ultimately, Balboa offers two things. The first one I kind of went through is more of a term loan, although it's got shorter terms that are similar to revenue lending, but the rates are much better. This has a lower revenue requirement, only $10,000 to get into, versus the first one we looked at with $300,000 a year to get into. And again, that's not surprising. Term loans require more revenue and better credit than what you're going to find with cash advances. So what's nice about Balboa is they offer both. You can go to them, and if you're too high risk for a term loan, they can give you the revenue lending. But if you have the $300,000, you have the year in business, you have what they're looking for, the average to better credit, then that means they can open up and give you an actual term loan. Now, again, they don't list their fees, so I'm not able to show you those because they didn't contact us with that information and it wasn't listed on their actual website. So Bluevine, they offer invoice factoring and lines of credit, two completely separate products. Invoice factoring, I'll address that now, but we're going to talk about several sources that offer it. By the way, I'm a big Bluevine fan. I think they're pretty cool. Invoice factoring is where you basically have invoices of people that owe you money. Customers, businesses, government, they pay you over time. So maybe it takes them 2 months or 3 months or 4 months for them to pay you. Maybe you're offering them terms to pay you over 2, 3, 4 months. What invoice factoring is they give you 80 or 90% of that money in 24 hours without you waiting the 2, 3, 4 months to get paid. Then Bluevine would collect the money from the actual source that owes you the money, and then they deduct their fee and they pay you the difference of the 80, 90% they gave you within 24 hours. So what it allows you to do is give somebody terms to pay you over 5 months and not wait the 5 months to get paid. Bluevine will advance you 90% of whatever it was that you charged within 24 hours. So let me give you a real example. Let's say customer you have $100,000 worth of outstanding money that customers owe you. Bluevine would give you 90 of that 100,000 tomorrow, the next day, after you qualify. It takes a few days to qualify, but once you qualify, they give you 90% of that money the next day, and then the other 10%, once they collect from the people that owe you the money, then they give you the rest of the 10% once they collect that money and lower their fee. And then lines of credit are obviously what you're used to. They're very similar to credit cards. The only difference is that you can take cash against them without paying a 20, 30% interest rate like you do with credit cards. You could use them and reuse them, and you're only paying on what you owe. Okay, so those are the two. So for invoice factoring, there are no reserves or minimums. So what this means is it means there's no minimum amount of receivables you must have to qualify. Some sources have that. Their systems sync with your accounting software and they connect to QuickBooks Online. Bluevine's one of several lenders that we're going to talk about today that is experimenting with artificial intelligence. By this, I mean what they do is they plug right into your accounting software for invoice factoring. They plug into your QuickBooks or they plug into your bank account for the line of credit. And then their systems are automatically looking for different triggers to determine an approval. What that means to you, very fast approval, very fast funding. Most of these that specialize in artificial intelligence, like Bluevine, can get you approval same day, usually within a few hours. And they can usually fund, like your line of credit's fully available for you in a day or 2 days. That's pretty crazy. Usually lines of credit with a lot of lenders historically have taken a month to 2 months to get. Here, with sources like this that are using AI, they're able to get you the money very, very quick, even in a lot of cases, 1 day to 2 days max, which, again, isn't uncommon for expensive revenue lending products, but it's very uncommon when you actually talk about the availability of lines of credit. So they also work directly with FreshBooks and Xero. These are other types of accounting softwares, and rebates are distributed on the same day they actually fund. You can get up to $2.5 million in invoice factoring if you're doing that product with them. Now, your business must be either a B2B or B2G, which means this is very common for account receivable financing, which means your account receivables need to come from another business or the government. They can't come from an actual individual. They do not work with medical or healthcare industry businesses at this time. Some companies specialize just in medical and have other parameters to qualify for AR that comes in the medical industry. The business must have revenues of $10,000 a month or more to qualify. Submitted invoices must have a face value of $500 or more. Just so you know, a lot of AR companies have no revenue requirements. So this is a little bit different from some of the other ones that you see out there. Payment term must be less than 13 weeks, which means the people that are paying you must be paying you, or the money that your terms you've given them has to be less than 13 weeks for them to consider that to be factoring, or consider that to be something they'll actually finance against. So fees for invoice financing. There's a flat advance fee for 85 to 90%. Again, of the invoice amount. I just talked to explain to you what that is. There is an ACH, which is free, which takes 1 to 2 days to get the money. So if they come in, you get an invoice today. With the ACH, it's going to take up to a couple days to fund. Or if you want the money quicker, then for $15, they could do a same-day wire. And Bluevine will penalize you for what is referred to as deadbeat clients, basically people that don't pay their invoices. So if they don't pay their invoices, then you're going to have to pay that money. A lot of AR companies aren't like that. They take accountability if they can't collect the money from the person that owes it to them. And you've got to have a consumer score of 530. Now, they offer a line of credit up to $150 grand. 24-hour approval. The business has to have revenue of $10,000 a month or more. You should really pay attention to this because we deal with a lot of credit lines, and Bluevine has one of the easier to qualify for credit lines that you're going to find out there. Now, they have flex credit lines currently run from $5,000 to $100,000, a little bit easier to qualify. Interest rates are as low as 4.8%, so less than 5%. There's no maintenance or unused credit fees, so there's no additional junk fees in there you're going to find. You've got to have a consumer credit score of 600 plus. Guys, this is a really good one you need to keep track of, because to have $10,000 a month in revenue and to have a 600 credit score is a very easy requirement to get approved. Most credit lines require 680 credit scores or higher, and a lot of them require 2 to 3 years worth of tax returns. Bluevine doesn't require the tax returns, and they're pretty lenient on the credit score, which makes this one of the easier to qualify for credit lines that's out there, which is why we like them. Because again, it's harder to find these easier to qualify credit lines, and they do a very good job of that. Bond Street. Now, they offer term loans of $10,000 to $1 million, terms from 1 to 3 years. So you can see when we talked about Balboa with their term loans, they went to about 24 months. They go up to 3 years here at Bond Street. They're going to ask for both an EIN and SS. It's very common. So I teach a lot on business credit without a personal guarantee. The reality is most loans, you're going to provide a personal guarantee until your business is significantly more established. Many millions, maybe 10 million plus in revenue, really established business credit at exactly the same time. So you're really going to have a lot of those things typically before you're going to qualify. So again, term loans up to 1 to 3 years. They're asking for that EIN and social because, again, you're going to provide a personal guarantee, as you will with most business financing, unless you're providing collateral. And they usually will send you the offer within 3 days or less. So fairly quick approval for term loan. And they only do a soft credit pull. I love this. Absolutely love it. And you should pay attention to this. I live in a world where one inquiry can cost you $20,000 in unsecured financing. Literally. Like, we work with customers that have 1, 2, 3 inquiries more than they should, and it costs them their ability to get unsecured credit lines. So you need to be very cautious about letting people pull your credit when it comes to getting loans, because that can keep you from getting other kind of business financing. An insider tip you should pay special attention to. So they only do a soft credit pull, which means it doesn't show as an inquiry on your credit report, which frees you from that inquiry. So anytime you can apply for a loan or a credit line without a credit check or without having a hard pull on your credit report, always prefer and go with that option, because that inquiry can help open up even additional financing for you. So 640 credit score is most likely to get a loan, but they will want to look at other factors. Again, pretty lenient. Most term loans want to see 680 higher, so pretty lenient on the credit score requirements to get the term loans. 2 years time in business. They want you to have annual revenue of $200,000 a year or more. Rates are 6 to 22% range, with an APR being a little bit higher, and they will charge you an origination fee. When you look at origination fees like 3 to 5%, if you say, wow, that's high, it's not. SBA would charge you the same, if not more, because you're paying SBA a fee and you're paying the bank that's giving you the SBA loan a fee, and they roll it into the loan just like they do with any of this kind of financing. So remember, any kind of fees that are charged actually just get rolled right in to the actual financing, which helps make it easier for you to get approved. So Can Capital. Now, they offer term loans and merchant cash advances. Remember, term loans have longer terms, harder to qualify, but lower rates than MCAs, which is short for merchant cash advance, also referred to as revenue lending. So for term loans, funds are sent in days, usually very quick, which again is a fast way to get money. A lot of them aren't like that. And they have daily fixed payments with automatic withdrawals, much the similar as revenue lending works. Now, term loan considerations: funding $2,500 to $150,000 per location you have, a 6 to 18 month term, no collateral, 3% origination fee, they roll right into the loan, and a prepaid payment discount available. So you can actually save money by prepaying it, which is uncommon. A lot of lenders will charge you a prepayment penalty, to pay it off early. Other lenders won't charge you a penalty, and some, very rare, offer you a discount. They offer you a discount even cheaper if you pay it off early, which Can Capital does, which is pretty unique. Their merchant cash advances, these are the ones that are much easier to qualify for. These are the easiest to qualify for loan that's out there, because they're typically just, as we talked about earlier, based on bank account management more than credit. The funds are sent quickly, again, $252,500 to $150,000 per location. Variable daily payments, they do daily withdrawals from your bank account, and $395 administration fee, to give you an idea of that. that. So again, these offer a couple different kind of loans. You can qualify for longer term, lower rate loans, or if you can't, they put you into a revenue lending merchant cash advance product. So having a couple products gives you some kind of flexibility. Now, Fundation, they offer loans and lines of credit. For term loans, they're usually able to get you money as quick as 1 day. 20,000 to 500,000 in financing, terms of 1 to 4 years. This is the longest we've seen, right? The term loans we've looked at so far have only went up to 3 years. This one goes up to 4 years. Why does that matter? It's very, very, very simple. The most important thing when you're getting a loan is the term. It's much more important than the rate. And let me explain to you why. A lot of people come in and they say, what's the rate? What's the interest rate? The reality is it doesn't matter. Your interest rate is going to be based on your risk, your credit scores, your financials, your time in business. All that's going to determine your rate. And ultimately, you're writing off all the interest at the end of the year anyway. So interest should never be your primary driver for these. Loan terms should be, because what we find is that a longer loan term gives you a much better chance of a lower payment than does a lower rate. And we have this happen all the time. With merchant cash advances, we give customers options. We say, do you want a shorter term and higher rate, or do you want a longer term and higher rate, or a shorter term and lower rate? 95% of our clients choose a longer term and a higher interest rate because their payments are lower. So term matters a lot. So when we're talking about term here, look for the ones that give you the 2, the 3, 4-year term. A longer term can mean a lower payment much more than a lower interest rate would. And you pay twice a month. This is pretty cool because a lot of merchant cash advance withdraw daily, or even term loans, they withdraw daily or weekly. They're only making you pay a payment twice a month, which is cool. No specific collateral. They want a personal guarantee, as most of these lenders do. A UCC blanket lien, very common. All this means is they're putting something on your business credit report, telling people out there that you have a loan, notifying them that there's a lien out there, and 1 year time in business is required for approval, and you've got to have at least 3 employees to get approved. This is an interesting requirement. More sources we're seeing in the alternative lending space are asking for requirement of employees to determine approval. Here's what's interesting is that in the business credit reporting agent, in the business credit world, if they don't have your tax returns, they determine your financial stability based on the number of employees you have. So you should know that when you file your Secretary of State records, because that's where a lot of these, the business reporting agencies get your information. They look at the number of employees you have as a factor too. Why? Because as you're bigger and have more employees, they look at your risk being smaller than if you're a solopreneur, right? Not saying that's adequate or not, or that's reasonable risk or not, but that's how they look at it. The more employees you have, the lower risk. You've got to have 100,000 in annual revenue to get approved with them. You need good personal credit. Rates are, and good personal credit typically means 680 score higher. Rates are risk-based. The higher the risk, the higher the rate. Don't even know why I say that. All financing is this way. Okay, I've spent going on 18 years now in consumer and commercial finance. All lending is this way. Your risk factors determine the rate. If you want a lower rate, then you need to lower your risk. And lowering your risk is good tax returns, good bank accounts, good credit, good time in business, etc. Those are all things that lower your risk. 8% to 30% when it comes to APR, up to 5% origination fee. And again, that's just basically rolled into the loan and no prepayment penalties with them. So for lines of credit, 20,000 to 100 grand. New balance after each draw is amortized on equal installments over 18 months. This is the way a lot of these lines of credit work. What they do is they give you a line of credit and then they give you an amortization or a certain amount of time that you can go to pay it off. In this case, they give you 18 months to pay it off. So for example, Bluevine is 12 months. I didn't put that on the slide, but they are. So they're 12 months to pay back their line of credit. Fundation is 18 months. And that keeps the payments a little bit lower. And you'd have to have collateral to get around to PG. But in most cases, again, you're going to have PG on personal guarantees on most of this. Again, they file a UCC filing, nothing bad, just notifies other people you have a loan. 1 year time in business required, 3 employees for the line of credit, 100,000 in annual revenue, good personal credit. Same requirements as we just looked at for their term loans as well. $500 closing fee, 2% draw fee every time you draw from the loan gets deducted. Rates are risk-based. The higher the risk, the higher the rate. Again, that's the same with all lending products, no prepayment penalties. So again, I like Fundation. I like the more products a source offers, the more I like them, because I think this is what we believe in at Credit Suite. Our belief is that it should be simple for somebody to get money for a business. And in order for it to be simple, you should be able to access as many funding sources or funding programs as you can from one place. That's why we work with over 1,000 lenders, because you come to us, we help you with funding with all these different lenders. So any lender like this that offers multiple funding products, I'm a fan of, because you can go to them and have better chances of getting approved than a lender that just offers one kind of loan, and they offer a few different kind of programs, including credit lines. Fundbox is one of my personal favorites, guys. I love Fundbox. You could even go to our website. We have a special link, creditsuite.com/Fundbox, to get approved. They have some really cool things they're doing, and I'll tell you a little bit more about it. So they offer invoice factoring. I'm not going to tell you what that is. I already explained that. And business lines of credit, explain that too. So they're very similar to Bluevine, that they offer both. For invoice financing, they don't tell you, they don't communicate directly with your customers. You continue to do so. Very, very uncommon. Almost always with account receivable financing, they are collecting the money from the people that owe you that owe the invoices. In this case, they let you do it. And that's huge, because I will tell you, the by far biggest objection we ever hear from people that want to do account receivable financing, they don't want other people calling their customers to collect on their behalf. They want to do it. Well, if that's a fear to you, then Fundbox is definitely something to consider. Fees start at 4.66% of the amount drawn. If you pay early, then the remaining draw amount plus 1 weekly fee is debited from your account. If you miss a payment, your late fee is 3x your weekly payment, plus an ACH missed payment fee. So they're great. You just can't miss a payment with them, or it's going to be problematic. Now, for their line of credit, get a loan up to 30 grand within an hour. Get up to 100 grand with financials with your tax returns. There's no personal credit score requirement. Here's what's even better. Here's why I love Fundbox. Love them, love them, love them. They don't even do a credit pull. They don't do a soft pull or a hard pull at all. There is no credit pull with them. Guys, this is the only credit line that I know that exists that you can get without a credit pull. That means if you have pretty good revenue, apply for this product, because there's no drawback. There's no negative, because there is no credit pull. And again, if you go to creditsuite.com at the bottom of the slide, you can see creditsuite.com/get funding. Go to creditsuite.com/Fundbox. We have a special link that we've worked out with them to be able to, for you to be able to check out and learn more. Accounting software they support include these. They are like Bluevine. They specialize in artificial intelligence, AI. So what their system does is their system plugs directly into your accounting software if you have account receivables, if you want account receivable financing, if you have consistent revenue to get the credit lines. What they do is they plug right into your bank account. What this means to you is you don't need bank statements. You don't need to supply bank statements. You don't need to receive your account receivable history. Usually with AR financing, you have to supply all of your account receivables. You have to supply all these logs of your AR. With Bluevine and Fundbox, it's all automated. They don't need that. With Bluevine and Fundbox, they plug into your bank account for underwriting decisions. They don't need your bank statement. So it just saves you time, and it also saves you the ability to not have to supply all these documents. Now, when it comes to their line of credit, I took a step back to this slide because I want to tell you how this works and exactly what it takes to get approved. We went through this process with Fundbox, and here's how it works. We went through, they plugged into our bank account, and they gave us approval for like, I don't know, I think like $6,000 initially. I think it was something like that. And then we went ahead and sent our tax returns. That's my advice to you. If you're ever using Fundbox, which we can help you with this as well, you can go to creditsuite.com/get funding or go to creditsuite.com/Fundbox if you don't have questions. Then what happens is then supply the tax returns. Whatever approval they give you, if you have pretty good tax returns that show some kind of profit, second huge tip for today, now that it's tax filing season, file your taxes with some kind of profit. I cannot tell you how many term loans and line of credit immediately become available to you just because you have tax returns with some kind of profit. Nobody wants to pay taxes, so everybody shows a loss. The problem is when you show a loss, most term loan lenders and line of credit lenders will not give you lines of credit and term loans. I cannot tell you how invaluable that little tip is. File tax returns with some kind of profit. So if you have tax returns that show some kind of profit or show show that you're not losing a bunch of money, then supply them. Whatever approval they give you, supply them. In our case, we went from $6,000 to 30. A buddy of mine, exactly same thing. He got approved for $5,000, $6,000. He supplied tax returns. They've approved him for 30. Then we use the credit line. We use it. 6 months later, we asked for more money, and they boosted us from 30 to 100,000. So we have a $100,000 credit line with Fundbox, no credit check, and we don't pay fees on it. So we only pay on what we use, and we use it from time to time to do new things that we're doing. So that's how this works. They're going to plug into your bank account. What are they looking for? Do you manage your bank account responsibly? Do you overdraw the account? Remember what we talked about earlier. Do you overdraw the account? Do you have non-sufficient funds? Do you have negative ending balances? Then don't apply. But if you've been in business at least 3 to 6 months, 6 months to 12 months at least preferred, and you have good bank account management, positive ending bank balances, non-sufficient funds, you don't have many of those, then this is worth applying for because, again, there's no credit check whatsoever. So Fundera, Fundbox really is one of my favorite new up-and-coming lenders. And again, you can go to creditsuite.com/get funding, fill out some info. We can get you approved with them, or go to creditsuite.com/fundbox. There's no inquiry. So if you have responsible bank account management, it may be worth applying. Fundera, they provide term loans, business line of credit, and invoice factoring. For term loans, 1 year in business, 600 plus score, 90,000 in annual revenue. Pretty low, right? Most of the sources we've said are 90 or 100, 120, or 300,000 in revenue. They're only 90. So now we're getting into some sources with lower revenue requirements that can still help you. Get term loans, 25,000 to 500,000, 1 to 5 years. Remember what I said, when it comes to term loans, longer term is even more important than lower rate. It will give you cheaper payment. This is the longest term loan we've seen yet, which means you have a chance to get the amount you want and still keep your payments very, very, very affordable. As little as 2 days for approval, 7 to 30% interest rate, possible prepayment penalties with them with some of the products. So for business line of credit, 6 months of time in business. Again, love it, because most of the ones that offer line of credit want to see 1, 2, 3 years time in business. So to get approved with only 6 months time in business, now we've got one with Fundera. Now we've got one with Fundbox where you don't need to be in business a year or more to get approved. Now again, Fundbox will not approve you as a startup, because you have to have, and I have to say this because I talked about them before and people start calling them and saying, hey, Ty said you can get approved in the startup. You can't. You have to have revenue, right? You have to have time in business of 3 to 6 months at least. They prefer 6 months to a year. Fundera, 6 months. Again, that's on the lighter side of that. 50,000 in annual revenue. Pretty cool, right? So this is a low amount of revenue and a low amount of time in business, which makes it one of the easier credit lines that we've seen to get approved for. 10,000 to 1 million in funding available, 6 months to 5-year terms. So again, longer terms, or terms to pay back the actual credit line. So Fundera, big fan. That's a pretty cool product they have right there. Approval in as little as a day. 7 to 25% interest rates, may require collateral with some products. What can be collateral? What do you have? The most favorable kind of account of collateral a business can have is account receivables. Okay, and guys, I cannot tell you how valuable these little nuggets are, because now that you know the AR is the most valuable asset a business has, even when you go to sell your business. By the way, if you listen to our podcast, you'll see that we have guests on there that talk about buy and sell businesses. They say the most valuable asset you can have is AR, because if you have AR, it gives you the best chance of getting SBA loans. So if you want long-term low interest rate SBA loans, account receivables is a great form of collateral or asset to have, meaning let your customers pay you terms. Let them pay you over many months. For example, at Credit Suite, we'll let clients pay 7 to 9 months, because in doing so, that becomes an asset to us having those account receivables outstanding. So that's a good piece of advice. That there's other things of collateral that could work, but AR is one. Higher rates for lower scores. Again, that's something we've already talked about. 6 months time in business for invoice factoring. Again, we talked about some sources earlier that were a year, so this is easier. Must have, that's pretty good, by the way. Most sources with AR financing want you to be in business 1 year, so 6 months is on the lower end if you do have account receivables. You got to have 50,000 or more in annual revenue. Again, that's pretty low. A lot of these lenders don't have annual revenue requirements for invoice factoring, but a lot of them have 1 year time in business. So this is an easier way to get them in the door. And the maximum advance is up to 90% of the total amount of your invoice. A 1-day approval. Customers can receive the financing, and then again, whatever's left, like if they finance 90%, the 10% minus their fee comes out and gets paid when the invoice is actually paid. Okay, fees are based on time it takes for customer to pay off the invoice. That's the way almost all AR financing is. The longer it takes for that invoice to be paid, the more you're paying the fee. So, for example, this kind of financing can be deceptive almost in how rates are calculated, because rates are like 1.3% a week or 1% a week outstanding. Well, 1% sounds low, but if somebody pays you over 12 weeks, then that could add up to quite a bit of money, right? So if you have somebody back that pays you back fairly quickly, well, then you pay much lower rates. So just keep that in mind. I'm not saying how Fundera does it's deceptive. I'm saying account receivable financing in general is kind of deceptive because 1% rates sound pretty low. But if it's every week outstanding, the more weeks it takes them to pay you the money back, the more money you're going to end up paying. Funding Circle. They're a peer-to-peer business lender. We're getting ready to do a topic on this. Peer-to-peer lending. We're going to be doing a YouTube video and probably a podcast on this topic soon. You can get 25,000 to 500,000. Decision is 24 hours. Funding is in as little as 5 days. Repay 6 months to 5 years. So they go up to that longer term if you're lower risk. Lower rates if you're lower risk too, down to 5%. No prepayment penalties. Origination fee could be less than 1% up to 7% depending on risk. Late fee 10% of missed payment, pretty common. In the SF fee, $35. Maybe doesn't make a difference. I just want you to kind of know what's out there when it comes to those kind of fees. So again, Funding Circle kind of works on a peer-to-peer basis. And the way that a lot of these peer-to-peer sources work is just like that. It's peer-to-peer lending where peers are contributing the funds. Some of the other sources out there that are doing peer-to-peer or even like you go to a peer and get them to contribute part of the financing and they contribute the rest. So there's a lot of these peer-to-peer platforms that are popping up. I love Kabbage. They offer lines of credit up to 150 grand, fast qualification in 10 minutes. This is what artificial intelligence is really doing to the online lending space. Kabbage, Bluevine, Fundbox. These guys are able to get you much faster approvals than ever before and get the money in your hands faster than ever before because they're letting technology make underwriting decisions for them instead of you having or them having to manually underwrite your application. The other cool thing about that is they're not looking at all these factors like credit and all these other things as heavily as a lot of lenders do. So very fast funding, very simple to get approved for, 6 or 12-month term, right? So this isn't long-term financing. We've seen term loans of 3, 4, 5 years so far, and this is up to 12 months. So it's, again, shorter-term financing or shorter term to pay it back. Remember, with lines of credit, we've seen a line of credit for 18 months available. Bluevine's 12 months. Fundbox gives you 6 months to pay back their line of credit. Kabbage is somewhere in the middle, 6 to 12 months. 6 month. They also a 6-month loan minimum is $2,000 if you're getting a loan with them. 12-month loan minimum is $2,000 or $10,000 is the minimum amount that they'll lend. You got to be in business a year. You've got to have $50,000 in revenue or $4,200 a month over the last 3 years. I like Kabbage. Kabbage makes it simple to get money. They're probably one of the ones that's figured out better than anybody else that I've found. $4,200 a month for 3 months. Maybe that's a lot of revenue for where you are now, but as you really get going, you'll realize that's one of the most lenient requirements out there when it comes to getting lines of credit and loan. And again, they're using this AI. They're plugging right into your bank account, which is how they're able to make these decisions. So what does this mean? You have to manage your bank account responsibly, guys. You have to. If you have to put your own personal funds in to fund your bank account so you don't overdraw it, put your personal funds in to whatever you got to do. Okay, I'm not big on using personal money. I'm good on using business credit to build businesses, but you never want to overdraw the account. So much of this up and coming financing is plugging into your bank account to make decisions. They're looking for positive ending balances. They're looking for more money going in than going out. They're looking for no non-sufficient funds. When you have that bank account management, there's so many of these financing options that become available for you. And lines of credit at $2,000 to $150,000. No fees. I'm probably gonna get in trouble with that because their logo is on there and it shouldn't be. No, so cover it up. Take your hand and cover the Kabbage logo so I don't get in trouble by them and have to take down this video. No fees to apply or establish your line. Pay fees only on what you take. Fees range from 1.5% to 10%. Rates are based on business performance factors. Save money by making early payments. Guys, I love Kabbage. I do. I love Kabbage. I love Kabbage and I love Fundbox. I love them because they make it easy for you to get money. And that's what I think is very important. The easier it is for you to get money, the less your personal credit matters, the less inquiries that are out there, the better you are overall financially. And Kabbage makes it really easy. They're one of the best sources I found out there for quick, easy, no hassle loans and lines of credit. I've had so many clients and so many of my friends that have got loans through them that have nothing but great things to say. LendCred, they offer unsecured business credit lines. Okay, so far the ones we've talked about are primarily driven by revenue. You have to have revenue, right? Well, LendCred is one that specializes on the new credit side. 50,000 guaranteed minimum, 25 to 100,000 in the first 30 days. You'll be denied if you have consumer credit utilization of over 30%. So this is completely based on consumer credit. This is a program where 2-3 inquiries can mean that you're done, kaput, can't get approved. Too high a utilization can mean you can't get approved, but they don't care about revenue. You can get it as a startup. You just need to have 680, 700 credit score, less than usually 6 inquiries in the last 6 months, and pretty good utilization of about 30%. 0% intro rates. Usually these go for about 6 to 18 months. They offer term loans as well. Loans from, and by the way, guys, if you're interested in this kind of program, go to our link, creditsuite.com/get funding. We work with a lot of lenders that are in this space. Okay. We work with Seek. We work with LendCred. We work with many Capwell. We work with, we've worked in historically with every source that's legitimate out there that offers these kind of financing. And what we find is clearly you are sometimes a better fit for one source than another. And we don't charge you any money to help you with loans at all. As a matter of fact, we get a discount because we place a high volume of loans. So if you like this unsecured program, 0% intro for 6 to 18 months, the accounts help you build business credit because they report on your business credit reports. That's based completely on your consumer credit quality, 680 FICO or higher, or a guarantor that has a 680 FICO. Revenue doesn't matter. Collateral doesn't money. Get approved as a startup. Well, then go to creditsuite.com/get funding, fill out a few questions. We're in touch pretty quick. And then we'll ask you some questions and decide whether LendCred might be a better fit or Seek might be a better fit, or Capwell, or one of the other sources that's out there. Because I'm only talking about LendCred today, but there's a lot of sources in that space. Lending Club, they offer term loans, 5,000 to 300,000, 1 to 5 years, longer term from what we've seen. A quote in under 5 minutes. Funds available in 48 hours if approved. No prepayment penalties. A lot of people think Lending Club is just for the consumer financing side, but they've got a pretty good business product as well, as long as you've been in business for 2 years. You got to have 75,000 in revenue, and you got to be in business in 2 years. Again, with a lot of term loan lenders, this was used to be common 2 or 3 years. Nowadays, there's more and more of these sources that are coming in where you can get approved without being in business to 2 or 3 years. Personal FICO score 620. Pretty low. As long as you got the time in business, this is one to consider. And the rates are pretty low too, 6 to 30% based on risk. So again, a good one to consider. Lendio, we've been doing a lot of business with Lendio and been really impressed with them. I think they have probably one of the best technologically advanced programs out there I've seen to help get you qualified for a lot of different programs, not just one. So they offer lines of credit, term loans. They also offer SBA loans. For lines of credit, they're about 1,000 to 500,000, 1 to 2 year maturity date. Funds available in 1 to 4 weeks, 8 to 24% interest. And Lendio does 76 different kind of lenders and a lot of different kind of loan programs that are out there, which I think is pretty cool. For term loans, 5,000 to 2 million. 1 to 5 years, bi-weekly, weekly, or monthly. That's pretty big because a lot of times you want to take money daily or weekly. They have better options for that. And 1 to 4 weeks, depending on it. Term loans usually take a long time to qualify. We've been able to get SBA loans done with them. We've been able to get term loans done with them. We're just very impressed with Lendio. Great team and great technology. They've done a pretty good job. A really good job. For short-term loans, 2,500 to 500,000, 1 to 3 years, time a loan term, time to fund 1 to 4 weeks. And again, they do that daily, weekly, or bi-monthly payments. And those rates are pretty low too, by the way, 8 to 13%. They offer, okay, so Lendio. Lendio is very similar to us in the sense that they work with a lot of different lenders and offer a bunch of different programs. Okay, we're very honored to be able to partner with Lendio and be able to place some of our customers through Lendio as well, because they definitely have programs that are a good fit. But what I like about Lendio is they kind of deal with all aspects of it. They deal with merchant cash advance and revenue lending. Then they deal also with the term loans. They also deal with the lines of credit. They've got a really good team. It's very very friendly. They're fast. They communicate well, a place you can log in to check out your results. And then they also work with 76 different lenders. So a bunch of different loan programs, from lines of credit to loans all the way up to SBA loans. And a lot of loans I didn't talk about, they offer too. So it's kind of like get a bunch of different types of financing in one place. OnDeck, they're really the biggest out there with these short-term revenue lending kind of lines. And they also are one of the only sources I know of that offers a line of credit with it as well. So for their loans, they go up to $250,000, terms of 3 to 24 months. Okay, shorter term, as we've talked about, you got to have 100,000 in revenue and a 500 plus FICO. You got to be in business for 12 months or more. This is pretty typical of the industry. OnDeck is the biggest out there. They went public years ago, and they kind of set the precedent of the 100,000 in revenue, the 500 score, the 12 months in business. Now a lot of others are trying to do shorter time in business, or credit score doesn't matter, et cetera, to kind of try to get an advantage over OnDeck. And they've recently notably pulled back on their lending criteria as they're kind of figuring out their model and their path too. But we just love OnDeck. They're very, very good if you can qualify for revenue lending. For lines of credit, 5 to 100,000, 6-month term or 6 months to pay it back, 100,000 plus in revenue, 600 plus FICO score, and you got to be in business 9 months. So this is what happened. When you get revenue lending, shorter term loans, right? 3 months, 6 months, 9 months, 12 months, 24 months, these revenue lending that only look at revenue to get approved, then what happens is there's first and seconds available, meaning you can get a first position revenue lending loan, and there's another one that'll give you an extra 10, 20 grand right behind the first. OnDeck has realized this. So they rolled out a line of credit that with their more qualified borrowers, people that have a little bit better time in business and better FICO scores, sometimes they want to see tax returns. They offer a line of credit as well, which we love. So they'll give our client $150,000 advance, then they give them a $20,000 line of credit. Who wouldn't want that? It's an extra, it's a bonus. So you're able to get a loan and a line of credit with them at exactly the same time. There's not a lot of finance sources out there that do that. Most of the sources we've talked about so far, you choose one. Yeah, they offer term loans and they offer a line of credit, but they're not going to go and give you both. But with OnDeck, they will give you both. If you're lower risk, they'll give you the line of credit and the loan, which makes them a really good source to consider. And if you're looking for revenue lending in general, check them out because they're using more of this artificial intelligence plugging directly to bank accounts. I'm not saying that they're the pioneers of that, but I will say they're the first source I ever remember doing that. So again, they're really a pioneer when it comes to technology because they are public, so they have more money to invest in their technology. And this is a great program they rolled out with the line of credit, and their revenue lending we're a big fan of as well. PayPal, working capital, and I'm going to throw Square into this as well. They offer loans, fixed fee of $500. I love that. When it comes to loans based strictly on your revenue, that's the lowest fee that I think you're ever going to see or that I've ever seen. There's no credit check. Again, now you're getting money with no inquiry on your credit. No personal credit doesn't matter. Maximum loan is 30% of annual PayPal sales. That's insane. Okay, most revenue lending will give you up to 10 to 12% of your annual sales. So they're giving you nearly 3 times the amount of what you would get in your actual annual sales. So again, that's very, very, very high. No more than $97,000 for a first loan is what they'll give you. So this isn't going to work if you're looking for $500,000. But most people are looking for less than 100 grand in a lot of cases, and they're a perfect source for you. And the third loan can be up to 125 grand after you've proven yourself. Now, Square is the same way. And this is why we tell clients, look, if you want fast, easy loans, then start processing part of your payments through Square or PayPal. Do that. Because Square and PayPal make it really easy to give you loans if you're processing payments through them and give you pretty favorable terms. $500 fee, that's insane. No credit check, 30% of your annual revenue. So make sure you're processing them because this is one of the fastest, easiest, lowest cost ways for you to ever get money if you're using Square or PayPal to do your transactions. Funding in minutes, no prepayment penalty. Again, you've got to have an account with them for 3 months or more to get approved. You've got to process about 20,000 to 20 million in annual sales. So guys, that's the lowest we've seen so far. based on revenue is only $20,000 a year. You're able to actually get approved with that. In the Premier account, it's a little bit different with them. So you've got to pay off any existing loans you have, available in several countries, but here mostly and primarily we care about the United States. Automatic Australia and UK, if you're watching this from there, they do help. Automatic repayments deducted as a percentage of each PayPal sale. So they'll take a percentage of your sale to get paid their fee back. And the fee is based on sales history, loan amount, repayment percentage. Their fee will vary, but again, their fee is as available as low as just $500. And a higher payment percentage will lower the fee, of course. So I love PayPal. I love Square. I think they make it easy. There's no credit check. It's a flat fee. They give you a high percentage of your sales. If you're not processing payments with Square or PayPal now, process some of your payments through them because they make it so much easier for you to get financing than a lot of other sources that offer merchant cash advances. QuarterSpot. They offer short-term loans. We like them a lot. They do a lot of revenue lending loans when other lenders can't. So if you're higher risk, consider them. If you're lower risk, you could still consider them as well. But I'm just telling you where we see a good use for them. $5,000 to $150,000 in loans, terms 9 to 18 months. Must have annual revenue of $100,000 or more. A personal FICO of 550 or higher. Got to be in business 1 year. Minimum average bank account balance of about $2,000. 2 employees, and you need to own about 50% of your business to be able to get approved. All lenders want anybody with usually over 20% ownership interest to be on the loan. Just so you know that. We like QuarterSpot with short-term loans, like revenue lending kind of loans. They do a really good job. The rates tend to be lower, and their approval requirements are more lenient, making it easier to get them than a lot of other revenue lending loans out there. Rapid Advance, standard and preferred loans. For standard loans, $5,000 to $1 million. 4 to 12 months. Gosh, can you imagine paying back $1 million over 12 months? It's crazy. Must have an annual revenue of $120,000, personal FICO of 580 plus, time in business 2 years, 1.16 to 1.3. This is what I was telling you about this factor rate. These factor rates look really low, but you have to keep in mind it's for the term that you have the money outstanding. So if you have it for longer term, then those factor rates get higher. For select loans, $15,000 to $1 million, 6 to 15 months. You have to have annual revenue of $240. This is higher to qualify. FICO score of 620 or higher as well. So they're very good with shorter term loans as well. And again, they've got, I think that's actually the same slide I just showed you. So to recap this, there are a lot of different options, as you can see, that are out there. I just talked to you about probably 15 of the most common online lenders that are out there. Time in business, the revenue, the bank account management, the consumer credit score. Those are the main driving factors for these. What's your time in, if you're basing the money based on your revenue, what's your time in business, what's your revenue? And now the newer thing is how many employees do you have? Sometimes some lenders care about that, as you've seen, others don't. When it comes to credit and consumer credit or unsecured financing credit lines, all they care about is credit. And for term loans, they care about both too. They want you to see average or better credit. As you see, term loans were 600, 620, 650 credit score requirements. They want you to have 600 plus credit score requirements usually for the term loans and line of credit, unless you're using a place like Fundbox that doesn't have a credit pull. Terms vary, as do interest rates and fees, and some require a PG, which most of them do, personal guarantee. UCC lien, not a big deal, just tells other lenders that you have money outstanding, so you got to read the fine print on these. So does this make sense? Does this help you? Well, then do me a favor. Please do 2 things. If you're watching this on YouTube, then please like and subscribe. Okay, wherever you are. If you're listening to this on our podcast, then please do the same thing. Leave a quick review and like and follow us on iTunes or iHeartRadio or wherever you're listening. If you have questions, give us a ring. I can't answer questions using Google Hangouts on YouTube Live, but what I do is I go live every Thursday, which will soon change to Wednesday at 4 o'clock on Facebook. So if you want to have a live Q&A, do all kind of whiteboard and chalkboard sessions and answer questions and in real time have them answered, then go to facebook.com/credit suite, like our page. And then when you like our page, what happens is you will be notified when we go live. If you want to access our social media channels, follow the red arrow on this image. It's the top right of our website. You can access those social media icons, and then you can follow us and get all kinds of tips. We do daily tips on Twitter and daily tips on Instagram. And again, over 300 videos on YouTube, and we go live every week on social media, including Facebook. So if you have any questions, give us a ring, 877-600-2487, info@creditsuite.com. Keep in mind, we work with over 1,000 lenders. Many of the ones, almost all the ones we talked about today, we work with. We just give you an easy place to get access to all loans and all funding programs that are legitimate in one place. So you don't have to know the difference between all these. Let us do all that work for you. We don't charge you a dime to get financing. We do have a paid business credit program that's different. But if you want to get financing, we help you with all aspects of it. And we typically get you lower rates than you'll ever get on your own because we place such a high volume of loans and lines of credit with the lenders. And we don't charge you a fee for that. They sometimes pay us a referral fee. So we'd love to help you there. So 877-600-2487, info@creditsuite.com. CreditSuite.com is our main site. Top right, you can access our social media channels. Please make sure you like and subscribe. And I will see you next week, where again, we have a live session come out on our podcast every week on iTunes, iHeartRadio, etc. And we also are going live on YouTube as well once a week. And many of you I'll be seeing in tonight's webinar. If you haven't registered, I don't think you can anymore. We're only allowed 2,000 registrants. And when I checked before I came on here, we're at about 1,900. But that's okay. We do a live webinar about every month that if you go to creditsuite.com and enter your email address, we can notify you on those when we go live. And like I said, we're max attendance usually before the event or registrants. So if you miss that, don't worry. We'll be going live again next month. So thank you all very much for tuning in. Hope everybody has a great day. Don't forget to like and subscribe, and I will see you next week. Thanks, everybody. Have a great day.